Hey guys, welcome back. In today's video, we are talking about AMC getting bigger, defeating the shorts, 140% ownership for AMC, and many more in this video. First, we're taking a look at this. Reminder that last year in Q4, AMC delivered 200 million in cash from operations and over 100 million free cash flow. This year, the box office is bigger, presumably merch, food and bev, and grocery popcorn are bigger, debt is lower, and interest rates are lower. We're about to see a lot of cash flowing into the till. So what we talked about for AMC's fundamentals, it's improvement. That's something that we have really been focusing on. And one of the things we talked about is how efficient they are getting. Now, this Q4, we have already seen great movies coming out. We have Wicked doing extremely well, which we'll talk about in a second. We have Avatar coming up. We have Zootopia coming up. So you can see how Q4 will be a very big Q4. Now, along with this, we're going to see how AMC is obviously going to benefit from this. And so presumably this Q4, we're likely to be looking at a lot of cash flowing in. And this is what we've said with how AMC's fundamentals is improving. And if you want to see in terms of why we expect Q4 to be bigger, you can see more than 4.5 million guests visited AMC theaters this past week from Monday through Sunday, more than 3.3 million in the United States and more than 1.2 million internationally. Approximately the 2/3 were there to view Wicked for good. So this is what we talked about with how these movies are doing extremely well. Now, remember, there are still 2 more movies that are coming out that are expected to do the same, if not even better, like we've said, Zootopia and Avatar. This doesn't change the fact that there's still plenty of other movies as well. And so this is why we are expecting Q4 to be extremely good. And so understanding how AMC has made their infrastructures better and better quarter by quarter, how they become even more efficient, we can expect them to do and benefit from this revenue, from this Q4 increase and improvement extremely well. And so this is why we expect the Q4 earnings to be very good for AMC. And now on top of this, because we are seeing how AMC is going to have a good Q4, it's going to show good fundamentals, you can see how the news articles are trying to say something else. You can see another expert just dropped an article saying they'll never buy AMC. Same script, different day. The Fool's expert states pumping out AMC FUD. Meanwhile, theaters are packed, Dolby is booming, institutions are loading, and retail is still holding strong. So you can see another article saying one reason I haven't bought AMC stock and probably never will. Now, by now, you should know that the majority of these articles are for one purpose only, which is to create incentive for investors to not buy AMC. And we've seen this because they do this without any research, without any facts. You can see in terms of some of the points that they try and bring out in these articles we talked about how AMC, how the theater industry is, of course, doing very, very well. And now, him saying, I haven't bought AMC stock and probably never will, is obviously very interesting because you can see institutions are trying to say the same, but not do the same. And what I mean by that is, you can see Citi sell rating on AMC, also Citi. So as we see this right now, Citi Investment has increased their share size of AMC by 180%. So over the last few months, one of the biggest things we've talked about is how we're constantly seeing articles, we're seeing these sell ratings on AMC, yet the institutions are not actually supporting the things that they are releasing. They're doing these different things. So all of these articles are saying do not buy AMC, to sell your AMC, to stay away from AMC. The same with these sell ratings, saying how AMC is overvalued at its current state, how people should let it actually go down. But despite releasing all of this, we're seeing something completely different from these institutions, which is that they are increasing their ownership on AMC. This is something we talked about for the past few months, but we have to understand it and compare it with the fact that they're increasing their ownership of AMC whilst telling people to sell AMC. So this is what we've talked about, how these institutions want AMC as cheap as possible and as much as possible. They've realized the potential, they understand the returns that they can get, and so they want to accumulate as much AMC as possible and make sure that the institutions profit from this and not the retail. And then you can see, understand this. Adding a few more AMC shares every paycheck, short sellers cannot defeat an army that slowly and continuously buys. So do not underestimate the people who are buying a few AMC shares every 2 weeks and holding. Now, this has been the case for AMC for a very long time. So from this, what we can understand are multiple things. Firstly, apes have not only not decreased their ownership, but actually have increased their ownership of AMC. Also is the fact that we are applying pressure to shorts every single day, every single week. This is why we've said that there is now an illiquidity issue for the short sellers, why we're focusing on this, something we'll talk about later on in this video as well, and why we've said we force them to create even more synthetics. Now, on top of this, you have to realize this as well, which is understanding the fundamentals of AMC, why we talked about it's important, and why institutions also want to buy it as well. Firstly, they realize that no one is selling. Secondly, is because they see how AMC is improving. Because previously, an article that was released was talking about since 2017, AMC's interest expense has exceeding operating profit. So for those of you who are active within the news community, you'll see plenty of FUD, like we covered, who talked about selling AMC. And one of their vocal points are the fact that AMC's interest payment. Now, that is something that we should definitely be looking at. Every time you analyze a company, their interest expense, their debt is something that you should definitely look at. And so for these short sellers, one of the things that they have always tackled are, of course, these debt that we talked about with AMC. However, what they then fail to say is how AMC is not only paying off and decreasing the debt, but also we're seeing how the interest payments are going down. And so they're talking about how the debt, how the interest expense is a problem, yet they don't talk about how AMC is slowly solving these problems. And that completely overturns the whole point of why you should sell AMC. And this is what we've said with how these articles are extremely one-sided. They're doing it for the sake of just getting people to sell so that other institutions can buy as many as possible, as cheaply as possible, because they fail to mention all of these other points that have completely countered what they're saying about AMC. And if you want to take a look at the technicals as well, AMC never disappoints. Chart is textbook perfection, falling wedge inside the falling wedge that breaks into a falling wedge, only to test the bigger wedge of the 2024 breakout low. Now, like we've said, we don't normally look at technical analysis. This is something you will know if you're watching after these videos. But the only times we would mention technical analysis is pairing up with extremely good fundamentals, and that's exactly what we are talking about. Bear in mind what we've just said. Institutions loading up on AMC. We are seeing debt payments decreasing. We are seeing debt decreasing. We are seeing, fundamentals increasing. And so along with all of these fundamental factors, you pair that up with the technical factors, you understand why institutions, why everyone is wanting to buy as much AMC as possible. And you can even see here, conspiracy theories flourish in some AMC subreddits. Any post countering claims like all apes have left with real data is immediately massive downvoted and ridiculed. This, combined with recent 13F on UBS acquisition of 23 million shares, is good enough for me to buy/hodl. So you're constantly seeing how people are saying apes have left. This not only with articles, but also within some subreddits that you're seeing with these community. Now, to this day, I still question whether these guys are actual humans or are they bots created by these news articles by the institutions. Now, the whole point they're trying to make is that every, or at least the majority of apes have left. Now, we know that that is not the case, whether it's talking about how people, apes, are constantly buying, whether it's every single day, every single week, or every single month, we are seeing constant buying. When you take a look at the inflow, outflow of AMC, which is very important, you're constantly seeing how the inflow is bigger, meaning more shares of AMC are bought than shares of AMC are being sold. And so if you're constantly seeing a net inflow, that would always means that there is more shares consistently throughout these few years being bought than there are shares leaving. Another thing that they fail to talk about, as you can see, Webull reported institutional ownership of AMC theaters is up 18.92% in 1 month. So another case of institutions buying, something we talked about earlier on, along with the fact that, of course, UBS recently acquired 23 million shares. If you want a visual representation of AMC institutional ownership, you can obviously take a look at this. A massive jump in ownership with these institutions, as you guys can see from this particular candle. So now, with all of this understanding, with what we've just said, you can see how ridiculous it is for these people to make these comments, whether it's the fact that they're saying that all apes are left, whether it's the fact that they are releasing these articles saying that I would never buy AMC, you shouldn't buy AMC, and you never should buy AMC, because institutions are clearly not going with that. They are doing the complete opposite with what these articles are saying. And I think that's the biggest telltale that you could get for how we should be expecting AMC to do. If these institutions, if these media articles are trying to get you to sell AMC, but they are doing the complete opposite, it really just shows how much they want AMC. And now, another big thing is the math doesn't add up. Retail owns 80% plus, institutions 60%. This equals to 140%. So, what we talked about earlier in the video is apes are constantly buying AMC. We've already talked about this. You can see this from the OBV as well, which is talking about the net inflow is always bigger than the net outflow, meaning that the apes have never, or at least small proportion of them, has sold AMC shares. But the biggest majority of apes have continuously bought into AMC. So with this, we know that a retail at least owns 80% plus. We've seen retail ownership, we've known AMC ownership, retail ownership at 90 or even 95%. Once again, this is something we never got confirmed because of the existence of synthetics, but we know for the real flow, AMC owns at least 80, very likely 90, and even 95%. Now, understanding that and understanding the fact that apes have barely ever sold, but have actually done the opposite and increased the share ownership of AMC, we realize that it can still be at 90%. Now, in this case, we'll use 80%. Like I said, I believe it's 90, 95 plus, but in this case, we'll use 80%. And so if that is the case, and now institutions own 60%, we now get to 140%. So that's obviously the existence of synthetics. That's what we've known, with something clearly going up with the ownership of AMC. And this is why we've said institutions are buying up synthetics, but that just strengthens our case even more in terms of why we've said they realize the potential of AMC. Because if institutions are willing to buy synthetic shares of AMC, that really just shows how much they value AMC. That just shows how much they understand the return of AMC can obviously get. One interesting thing I find is that in the past, for Cinemark, you could see 120% institutional ownership on Cinemark, something you could visibly see on the app. Yet for AMC, we can't see that. Now, the thing that isn't surprising to me is obviously they wouldn't show ownership above 100% for AMC because they know that AMC will expose them and have already exposed them. Now, furthermore, is another big thing, which is losses can be infinite. Now, what we're looking at is, according to, and was the GME quadrillion market cap we've shown, is that would make the share price $26 million per share for GME shares. Now, we've already said is that we're likely to be looking at a similar, if not higher, market cap for AMC as well because of the situation AMC and GME is in. Now, I've said already that I believe personally it is a glitch. However, it doesn't take away from the fact there is a possibility it's true, but we've already said even if it is a glitch, the real price is not far off from that because it could be 11 trillion, it could be 1 trillion. I just don't think it could be far away from that in terms of the zeros. Now, that would still make AMC an abundance. That would still make AMC worth thousands, tens of thousands, hundreds of thousands. And now this is why we've said losses can be infinite. And when you account for all of these synthetics, you start to understand why. So this is what we've said in terms of the reference to the GME quadrillion market cap, something that we've already shown in the past. Now, on the other hand, so we've just talked about how well AMC is doing, how much people want AMC, how much institutions have been buying AMC, and there's a big reason for this. Reverse repo for Monday, 1 billion. So we are now seeing it at 1 billion. Like we said, until it gets to zero, until we see the margin calls, it is something that we should keep our eye on, but it's not something that is a guarantee. The reason why I say that is because we are seeing it really holding at this 1 billion right now. We're seeing injection every so often, but we've already known what the reverse repo is used for and how we can use it to our advantage. Essentially, it shows the illiquidity issues in the market. And if we really do see the reverse repo go up, it's not a bad thing for us because banks right now do not want help from the reverse repo. They want something else that is easier to access, that doesn't show that they're struggling. And so if we are seeing the fact that they are borrowing from reverse repo, it means that they are in a situation where they are extremely desperate. And so that's what we have to understand from this. And so from here, we can see that right now, there is an illiquidity issue where there's barely any liquidity injected into the market. But the moment we see it go up to 10 billion, the moment we even see it go up to 20 billion, it means that these banks are extremely desperate and they need to borrow money from the reverse repo. And now, there isn't a surprise because when you see this, US banks are now sitting on $395 billion in unrealized losses as of Q2 2025. And so if you want to know, are they doing well or are they doing bad? Here is the case for it. Now, this is likely to be even bigger when you account for the derivative positions, when you account for a lot of things that they are not clearly showing. But the very fact it's already at 395 billion, we know that this is something that is bad. And we've said this is something that is slowly going to stack up even more. Bear in mind that one of the things they tackled about AMC is interest payment. These guys are facing the very same problems, but on a scale 10 times, 100 times, 1,000 times bigger. And is why we talked about that they rely on the reverse repo. And if you want to see how easily the market can just crash and turn upside down, Magnificent 7 stocks now reflect a record 38% of the S&P's 500 market cap. And so what we've seen recently is how the Mag 7 is extremely volatile because of the AI issue. Now, this is something we're seeing the market up today, but this is something that has been a caveat for a very long time. So if we do happen to see the market dropping drastically, this is how heavily it's going to affect the market, because when AI bubble bursts, the companies that are affected will be the Mag 7. And if the Mag 7 is a record 38% of the market concentration, you can understand how heavy the market will drop and how that will bring the rest down along with them. And so you can even see this. Essentially what Roy and Katie meant about turning up the volume is when they force buy in due to these FTDs. It is reflected delayed volume from the past on a given day. That's why you see how algorithms move the stock violently up and down. And it looks like a bunch of apparent people suddenly ganged up to buy or sell stock, which is BS. So this is what we talked about with forcing these guys, with pressuring these guys. Like we've said, AMC, GME, all of our apes were doing our jobs. Wherever you're buying shares, wherever you're doing the due diligence, wherever you're holding onto your shares, you are applying pressure to these short sellers. And that's ultimately what's going to get this whole job done. As always, none of this is ever financial advice, so do take our second of salt. Make sure you own due diligence and research, and I'll catch you guys next time.